All right, guys. Internal market structure, external market structure. Hey, what's that all about? All right, I'm gonna let you know. All right, I'm gonna break it down. I'm gonna tell you because it is a game changer. I promise you. All right, so get your pen and paper out and let's get ready to dive into this because this video is the one that you do not want to miss. Shout out to my boy Ghost, as always, lacing me up and supporting me big time. I want to say thank you, all right, for getting me to it. And with that being said, let's get to it, guys. All right, boom, got you over on Canadian dollar. All right, so check this out. This is how every trader, regardless of if you're a day trader, a swing trader, or a scalper, right? This is how you guys are gonna, enter the market with these ramifications, all right, if you will, right, with the same kind of sentiment or state of mind, right? Let me put it that way. You guys are all going to be looking to get into a trade by looking for certain things, right, that you need to see in order to get into that trade. Obviously, the first one being the trend, all right? So if you can find the trend, you damn near halfway with the strategy, all right? From there, you're looking to confirm the trend, okay? And from there, you're looking for a entry point, right? That's the framework, if you will, for any trader, no matter what asset they're trading, no matter what pair they're trading, right? It doesn't matter. That's what we're all looking for. So if you guys can understand that, right, then everything else that you learn will start to piece together with all of, with those steps. All right. So what I'm going to do for you guys is show you here in replay mode how we go through that checklist and then what the internal structure versus the external structure looks like and why it's so important for you to recognize the difference between the two. All right, because if you can understand that the structure that you're looking at is still internal, right, then you know that you're basically not ready, or it's not ready to take it, in the direction of the trend, right? That's basically what that's all about. This is a way for you to understand where your swings are, where price is going to play within, right, before going in the direction of the trend. Again, hopefully that made sense. If not, rewind it real quick and hear it again. All right, but without further ado, let's get into it, guys. So boom, here I'm on the monthly, and what I'm going to do, let me just bring up replay mode for you guys, right? And I'm gonna, instead of selecting the bar myself, right, I'm just going to actually, what, let's do this first. All right, go to the 1 minute. All right, and that way, when you go to the 1 minute, guys, and hit replay, it allows you access of all the time frames, versus if I was on the daily and then I hit replay mode, right, I can only access from the daily and up, right? I would not be able to get to any of the lower time frames, right, so that we can get all the details and the nitty gritty of things. All right, so keep that in mind if you're ever using replay mode for back testing or what have you. All right, so going to the minute time frame, all right, and I'm gonna do replay mode, and I'm going to have it go back in time. All right, so let's do 2025, and the latest is July, so we'll start on a Monday. All right, that's how we traders get to it. Okay, all right, so here I'm on the 1 minute time frame. What I'm going to do is what I like to do, right, go to the daily time frame or to any higher time frame to try to determine what the market structure is and what the overall trend is. So remember when I told you guys about that framework, right? The number one thing was finding the trend. The number two thing was confirming the trend on a lower time frame, right? This is what we call multiple time frame confluence, right? The confluence is that whatever the lower time frame is showing you, it's the same thing that the higher time frame is showing you, and vice versa, right? And then from there, we're looking at the third step of that blueprint, which is the entry part. Where do you enter the trade? What are you looking for to enter the trade? All of those type of things. How much are you going to risk? What kind of lot size are you going to put on? right? Where you're going to exit, right? All of those things are the last piece of the puzzle in terms of getting into a trade. So again, I'm going to walk you guys down, this very beautiful lane, all right, of finding the trend, confirming the trend, looking for your entry, but even more importantly, all right, is understanding that internal and external structure. That way you won't get confused. All right. This is one of the heaviest things with traders. They have no idea how to actually know if they're in the direction of the trend or not. Right. So they're looking at this internal structure, which is bearish, right? But the external structure, especially from a higher time frame, is bullish. So they're selling when they should be buying because they believe that they're in the downtrend, not knowing that they're just within internal structure of a uptrend. Right? Let that marinate for a second. Okay. But again, if the light bulb didn't come on yet, give me a few minutes, right? Hold my beer and it's gonna come on. All right. So here we go. Off the daily time frame. Well, looks like we're breaking highs. All right. So I'm looking at that as a break of structure. Okay. And then I'm asking myself, from where price broke, right? This is where, price was here. And then eventually we came on around and then we broke above it. So here's the point of where price broke right here. All right. So if price broke above at this point from here to here, all right, again, from here to right here, all right, where's the lowest price got to before it broke this high? So from this point, if I go straight down, right, and I just draw a little box to where price eventually came and broke, right, in this space, where's the lowest price got to? And the answer is right here. That is your swing low, ladies and gentlemen. All right, it is a higher low because this low is higher than this one. This low is higher than this one, right? These two lows kind of seem equal, right? But aren't both of these two lows higher than this one? So you can clearly identify, right, guys, that the highs or the lows are getting higher. We're getting higher lows, higher lows. So if we're getting higher lows, and then you can see the highs, right? This is the high, but this one is higher. So this is higher than this one. So we got higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, potentially a higher low. Now some of you are like, all right, I'm picking up what you're putting down so far, Bain. I can see that we're in an uptrend. I see what you're saying. You're on a daily, right? And you're looking for that uptrend and you found it. So what you did, I see what you did. So you found the highest point that price recently broke, right? And you mark that as your break of structure because that is breaking structure, right? It's as simple as that, right? I like a lot of these, acronyms because they mean a lot of simple things, which they should, because what you're learning is simple. The hard part is nobody's willing to wait for all of this to happen. They have no patience, right? They have greed, right? They have fear, they have doubt, anxiety, the list goes on and on and on. All right, hopefully I can help you, get rid of some of that, if not all of it, right, with breaking this down. All right, so again, what do? We found the trend, right? And when we found the trend, it's because we were able to identify price breaking a high or breaking a low. That's basically how it starts, guys. I just gave you the game. That's how it starts. So we find the high that was broken. We look from where price broke it to where that previous high was. What was the lowest point? We found it. We marked that as our swing low. And now, did price form a high? Is the question. Yes, it did. So here is our highest point, right, from where price currently has gone. All right, and that is your swing high, right? And it's mainly a swing high because we came up and then we swung back down, creating our V shape, right? And showing, price falling instead of rising, right? to let us know that, that was a swing. All right. So right now you have what we have, or what we always need is your low point and your high point. So even though price is falling right now, guys, we are not looking to sell it. Okay. And the reason why we're not looking to sell it is because price is in a uptrend, which is the first thing that we discovered or figured out, right? So if price is in a uptrend, you want to be looking for buys. Okay. This is it right here. Most of the time you'll have traders, maybe they identify that it is an uptrend, but they're trying to sell because somewhere on the lower time frame, they're seeing downtrend structure, right? But that's not the overall trend. That may be, the trend on the lower time frame, right? But that's not the higher time frame trend. So being able to determine what is your higher time frame is going to be the difference in your trading. When you can identify your higher time frame, and again, that usually will be determined by the type of trader you say you're going to be. So if you are a swing trader, your higher time frames are the monthly, the weekly, and the daily, right? If you are a day trader, your time frames are the daily, the 4 hour, the 1 hour, right? If you are a scalper, your time frames are the 1 hour, the 30-minute, 15-minute, all the way down to the 5 and 1, right? Some people make, the 1 hour, or the 30-minute, their higher time frame, and then they just deal with the 5 and the 1 minute, right? It just all depends, but in, generally speaking, this is how it goes. So, we're on the daily time frame looking at all of this. So this would be from a swing trader's perspective. All right. But at the same time, we could see an opportunity that we call intraday, meaning it's within the day, right? And we can get into, a day trade, right? With just being able to analyze what we see. So again, let's, kind of get back to it, right? We found the break, we found the low, we found the high. This is our swing low. This is our swing high. So this is our external, okay? That is our external structure. All right, we finally get to it, okay? External structure, right? So, Bain, what you're saying, or you gave me external structure, so then where's the internal structure? I'm glad you asked. Here it is. Price, anytime you have price anywhere between these ranges, right? Price can keep doing all day, all night, right? It can keep just staying within this range. But as long as price is not broken above or below the low of that range, right? That external range, that swing low, or above this external range, which is the swing high. If price did not get above it or below it, it is internal. Okay? This is all internal. What that means, guys, is if you are looking to buy because you found out this is an uptrend, you're basically needing to identify your points of interest after price has broken this high. What are points of interest, Bain? Well, your imbalances, right? Where you have gaps between the candles. So these are your fair value gaps. All right, here are your order blocks. Okay, these are the last bear candles in this downward move before price pushed up and broke a high. All right, very key, important areas. All right, they show that there was a lot of bullish pressure that came from this area that was able to break a high and go higher. So showing you that we are still very, very bullish. Okay, another point of interest would be a Fibonacci area. So if you take Fibonacci from that swing low to that swing high, right, you can see here are where your Fibonacci areas sit. How ironic that they line up with the FEG that was one of our points of interest, right? And it also lines up right above the demand area, which was another one of our point of interest, right? These are what we call confluences, right? So when these things come together, we know that there's a high probability that this trade will work out in our favor. All right. So now, again, I'm looking at this and I'm seeing, where is price in relation to my points of interest? Well, price is nowhere near them right now. So there's a chance that it could continue falling to get to these areas, right? So I know that in an uptrend, you have two phases of market structure. You have the run, you have the pullback. You have the run, you have the pullback, you have the run. So if I'm looking at this, I can see here's our run, here's our pullback, here's our run. So we're in the pullback phase right now. And in that phase, guys, we can continue falling and pulling back to any one of these points of interest before we start another run phase. Do y'all see how that lines up? Run, pullback, run, pullback, run, right? I'm just going to leave this right here for illustration purposes, okay, the drawing, because I'm going to play this out and let you guys see what these candles do and how they react. Now, again, this isn't cherry picked, right? I only picked the day and the time. I have no idea, where it was going to go. And this is where it went to, right? So like, let's start to play this out a little bit, because we identified the trend. We know it's in the uptrend, right? We got our internal and external structure. We know what the external is, and we know that everything that happens within that is internal. All right, we got that. So now we're just waiting for price to get to our points of interest, right? And we can make a decision on whether or not we want to get in for a buy from these areas, because we buy low, we don't buy high, right? Another little major thing for you rookies, right, of not understanding, that concept, because you don't even understand market structure. So you don't even know that you're buying high, right? But once you, get with the program, you start to see it and you understand, okay, yeah, I don't want to buy here. I want to wait for price to get lower to one of my points of interest, right? Within the external range, right? And then from there, you want to see if you get any bulls to show up, showing you that it's potentially going to do what it previously did, right? In the past. That's what we call look left. You guys hear that term a lot. What does it mean? It just means we look in the past to predict what, the potential future is going to look like, or how it's going to play out, right? So let's run it. Got some candles going. All right, look, it pushed up a little bit and you probably thought it was just going to go and take off, right? But it never got to any one of our points of interest. Look how we get to this FVG, all right, and we reject it, right? But then eventually we break it. Now we're in the middle of these Fibonacci areas. Now, can anybody tell me before we go forward, where do they think price is going to go? Do y'all see my markup, right? Do y'all see that little retracement? Can y'all see what price is doing so far? I'm not psychic, all right? I know it feel like it, right? But check it out. Let's see where price kind of gives us a little bit of hesitation or stop. All right, keep it going, keep it rolling. All right, looks like we might be out of there. All right, so basically what happened was we retraced to the 50%. So out of this move from this low to this high, coming back this far was 50% of that move. And that's what Fibonacci is all about, just kind of giving you, a percentage of how far price has made a retracement off of its, previous run up or run down, right? So here's, people taking their profits because, if they bought from here and they got up to here, they're like, yay, right? They're taking their money, they're closing out, that creates sell orders. And then you start to see it paint as candles falling or bearish candles, right? So now, people so high and it's pushed price down to a lower price. And they're like, well, damn, it's almost at the price, I kind of got in from before, right? So last time I got in at this price, right, I made a killing. And it's still in the uptrend. All right, I'm going to try and get in at that price again and then watch it do what it does, right? But in this case, we got 50% of the way. We got this nice bullish candle to let us know the bulls have shown up. And pretty much Fibonacci says we can aim for this as our take profit. I'm just going to let it play out and see what happens or where it goes. But there's one level, and that was super close. And okay, so didn't really quite make it all the way home, but we definitely got it to an area that you know, was just giving us boohoo money. All right, so from here to here, right, 60 days, right, but we got 595 pips, and if we bought it, put in our stop behind here, we would, you know, pretty much have a good amount of money. The point is, guys, that if you can spot market structure, right, I mean, if you can read market structure and you can spot the trend, right, from a break of a high or a break of a low, right? Typically, if you're breaking highs, you're in a uptrend, and typically if you are breaking lows, you are in a downtrend. All right, but if you can identify that, and you know, you're at this point, okay, you identified the trend, right? You can mark the break, you can mark the swing low, you can mark the swing high. Know that your swing low and swing high, whatever happens within here, is internal, meaning you don't necessarily want to try to trade what's happening internally, right? Let me take that back. You are going to trade from this internal structure, but only when it's at those points of interest, right, that I mentioned, right? So that's why it's important to know about fair value gaps, demand areas, Fibonacci, right? All sort of things, even equal lows, right? This is still like a form of liquidity. All right, so just knowing liquidity, knowing support, right? This is how they all play into making that decision for your trade. You know what I'm saying? So find the trend, right? We can confirm it just going to a lower time frame. So if I went to the daily, right, I'm just looking, I'm sorry, the 4 hour, I'm just looking at price action, right? And again, this is just rising, right? And I know that here was the highest it got before it started falling. So once again, even though I'm on a lower time frame, I still know that because price is not above this red line or price is not below this green line, that everything in here that happens will be internal to those two areas. But the whole time I need to look for buys, right? So as much as this is probably going to fall, which it did, right? So a little hit first, but then there goes the fall. Okay, and again, that's the halfway move right there, as you can see, right? But this is the area where I'm going to be wanting to look to buy from, right? 50% or lower, right? If you can get it, right? If it happens, is where you want to look for your buying opportunity to now have it go in the direction of the trend. Okay, and it's the same vice versa. So let me just try to, you know, because some people will probably see this and go, man, well, you're just showing uptrend. What about the down? All right, well, cool. Let's do shout out to my boy Martez for this. I think it's Control I or Alt I. All right, the Alt key and the letter I, right? You can just flip your chart. All right, so I'm gonna erase everything, right? And I'm gonna give it to you guys again from the top, where I'm realizing that we are in a downtrend, right? And I can see this is a high point. The next high point is lower. The next high point is lower. The next high point is lower. So we are falling in price. Y'all see that? Okay. And not only are the highs getting lower, but the lows are getting lower. Okay. So we have lower highs and lower lows. Bain, what's a downtrend? Nothing but lower lows and lower highs. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Oh, okay. All right, now I see how y'all be finding the trend. I get it. All right, I see it. All right, because sometimes I be trying to read all of this little stuff up in here, and I be thinking that we're in an uptrend. Yeah, I know, right? But that's not what it is, right? It's the higher time frame where you can actually read the candle structure. You can see where those highs, how those highs are going, how those lows are going, right? It tells on itself, right? You can look in the past here, right? And you can see, you know, just highs getting higher, right? Those are all getting higher. All of a sudden, we break below what used to be high, and now we've gone lower. So lower high, lower low, lower highs, lower lows, right? It's all there, guys. Lower highs, lower lows, right? And then all of a sudden, we break above the high. So now we got higher highs, higher lows, higher highs. Then we break below this low. So now we got a lower low. And then we got a lower high. You can see it, right? Lower highs, lower low, lower highs, lower lows, lower highs, and this is higher lows, right? But eventually we break and we keep going lower. So all of this, guys, was down. And then we went up a little bit. Okay, then we came back down, right? And we keep going down, right? Dropping, right? Yes, we get some movements back, but when you guys can read the structure, you guys can demystify all of this, right? And you can really start to see. All right, so either way, right, here we go, just to give you guys the reverse, was this is a downtrend. We've established that because we know how to read market structure. And so this would be the low that was broken, right? Remember when we had it on the upside, it was the high that was broken. So let me flip it real quick. Boom, remember, it was the high that got broken. But now in a downtrend, it will be the low that gets broken. So once again, we mark that as our break of structure. All right. We then mark this as our swing high. All right. And then, and again, I told you guys how to find that. And then finally, we have a low point. All right. So the lowest price has gotten to so far from where it is. Okay. So now we have it in the downtrend structure, right? Know what the trend is. Got our swing high, got our swing low, got our break. So we know we're looking for sells. Do we sell low? No, we don't. We wait for price to get to a point of interest at a higher place within that external structure. So someplace within here, right, we'll have a supply area, or we will have an FEG that was there, right? That got blown past, but you know, we know, all right? Or we'll have a nice little Fibonacci area. Okay, boom, bam, boom. So pretty much you guys can, you know, already know what happened, right? So right about from here, right, is where we were, right? There's our low. Get rid of Fibonacci for a sec. All right, so there was the low at the time. Okay, and so everything happening is internal, which again, you can try to catch this going up into these points of interest, but your goal is to take the trade from the point of interest. So when you've gotten a 50, 60, maybe even 100% retracement on the original move, right? So coming back, right, from the downward move, if you get, you know, this is 25%, maybe this is 50%, maybe this is 60, and then coming all the way back to the high, it'd be about 100% retracement. As long as price stays below this swing, we're bearish. Okay, so you want to be looking for sells at any point in time when you see prices going higher, and then giving you some form of seeing a lot of bears show up. And once that happens, guys, it's a wrap, right? You aim for the swing low, because if the retracement gets all the way up here, what this tells you is that the last time price came down to this area, it was the last place where it shot up again. So if you're selling from this area, here's the lowest place that it's going to get to before potentially rising again. Of course, it can still break and go lower, which we would definitely have happen if we're continuing the downtrend, because that's what makes downtrends, when you break lows. All right. If it wants to continue doing that, it will likely do so, but it's definitely going to take out this low in order to do that. So you aim from this high to this low, right? and there's easy 600 and some odd pips in it for you. All right, but let's play it out. Disrespect the FEG, just kind of get a little bit above it, right? So off the Fibonacci level, we got rejection off the 50% level, and then we just got a massive bearish engulfing candle closing back within the FEG. So that tells you, we're going to fall, right? And these are the little things, right? That's another chapter we'll get to, but mainly, if you guys can understand that finding the trend, marking your swing high, your swing low, and your break, knowing that everything from the swing high to the swing low is all internal, right? Meaning going against the trend, right? And all you want to do is wait for price to get to those points of interest and then shift in the direction of the trend and then take the trade, right? You're going to be set. All right. You guys are absolutely going to be set. So I hope this made some kind of sense. You know what I mean? If it did, let me know. If there's something you guys might have some questions on about it, also let me know. Throw that in the chat. Let's talk about it. All right. Meantime, in between time, y'all know what it is. It's your boy. Peace.
Want to get money? Want to get paid? That's Forex. Like a sensei, then you know you got to come and swing my way. And if you want to fast forward, hit replay.